Change, that's none other than Kiprono Kittony, on just how the state of the market from the board's perspective is doing and what does it mean and translate to the economy as well. Are we expecting to see the same rally as well happening in and what's in the offing for the exchange? Welcome to the Trading Bell Show. Chairman, it's good to see you, sir.
Thank you very much, Mina. Wonderful to have you here again.
Absolutely, absolutely. And as you heard from my introduction, we had a tougher conversation last year. And you were very optimistic and looking forward. You just appointed the new chief executive. And just to paint a picture, are you happy so far with the tidings and what's happening?
Mina, I would say with no fear of contradiction that the year 2026 starts with glad tidings for the exchange.
Absolutely.
Glad tidings, brought about by macro factors that are beyond our control, but also because of deliberate policy actions by the government of Kenya and deliberate actions internally by the NSC with our new strategic plan, spearheaded by our new CEO. So a combination of factors actually led to the NSC indices all being in their northern territory. We are doing extremely well. Our all-share index at 215 and rising. When I took over as chairman of the exchange in 2020, the market capitalization was approximately 1.3 trillion. And as you know, in the month of January, we crossed the 3.1 trillion.
Absolutely.
And I would say that we are literally all guns blazing, and markets ebb and flow. It's not to say that tomorrow there might be a downturn, but we are optimistic that the steps that we have taken will create a very vibrant market.
Absolutely. In fact, you're being polite because I think the latest has already now passed the 3.4 trillion.
Yes.
And congratulations to the work.
Thank you.
And just still coming back to what we spoke about, because our last conversation emphasized the need for stronger pipeline of listings, including state-owned enterprises. And as we're speaking right now, I think we just closed the IPO for Kenya Pipeline. And I listened to you when you were addressing the president and the members who were present there, that at least your legacy will not go without one or so. So I don't know, what are your sentiments on that, and what does this mean as well for the market?
Mina, it's been over I think 18 years since we had a listing.
Absolutely.
Yeah, so that was a pretty long time. And we're very happy that the Kenya Kwanza administration sees the market as a very vital tool for economic revival and empowerment. And you will recall that when President Ruto took power, one of the first places he went to was the exchange. He made certain commitments, and I'm glad to say that he has lived, he's kept his side of the promise.
You're right.
The Nairobi Securities Exchange, like many frontier markets, face a supply side issue. And Nairobi is one major market. I mean, we're the fifth largest market in the continent of Africa.
Absolutely.
And, the supply side has always been a big constraint. So when we are looking at big global investors, the likes of BlackRock and the rest, they look at our market as too thin, with having too few products to invest in. So by bringing Kenya Pipeline to the market, it sends a strong signal, a strong show of confidence that the government does believe that it is an area that can be used for the raising of capital and also for the democratization of wealth. I'm glad to inform you that we have many other other listings in the offering. A family bank in the course of this year.
Lovely.
We're talking to several other privately owned enterprises who have shown an interest to come to the market. Last year, you see, we also diversified our product range. We got a gold ETF brought to market, and we continue to the Satrix Gold ETF, and we continue to use a lot of innovation, and we were rated by the African Securities Exchanges Association as the most innovative exchange in the continent of Africa.
Wow. And really commendable, and we're looking forward to such listings as well. Let me move on to just what we're seeing as participation in the market. Local investors, big time numbers. And I think the latest is that we have seen local investors taking roughly 75% of trading volumes, which is really commendable. I mean, we didn't have these kind of numbers before. I don't know, how do you feel about this aligning to your strategy to democratize participation?
You see, the exchange has always been seen as a bastion for traditional wealth. It's been seen as a private club, exclusive club of a few high net worth individuals and companies that they trade and, over a cup of coffee. You remember that the exchange moved from the Standy, where it was historically located after the independence, and to its new location. And we had the demutualization of the exchange to take place. We had the Africanization come forward. We then had major, I think, to the Safaricom IPO was a big shift in the direction of which the exchange went. When the president came to the exchange on his first trip, he says, "Look, I'm giving you guys a challenge. We'd like you to this place must lose its facade of being a private club or high net worth individuals. We'd like the public to participate on a regular." And I'm glad that partnering with Safaricom, partnering with Kestrel Capital, we have launched the ZD app 2 weeks ago. And like you rightly said, I mean, the numbers are just ballistics.
Absolutely.
And it demonstrates that the public in Kenya have a great appetite for investment. The uptake of technological platforms in Kenya has been proven beyond reasonable doubt. I mean, you saw with gaming. I mean, Kenya is one of the countries where the majority of the public, wananchi, at the lowest level, are gaming on a regular. So you see, by virtue of having ZD now, instead of people betting on a football match, they're able to actually invest as low as they can. And at the same time, there's been a very big drive by government on policy reform. And for example, we've had a conversation now on taking the tariffs on the levies off low trading volumes, just to encourage the public to participate more. I can tell you, Minor, that 3 days before the launch of the exchange, when we were on the trial run, over 50% of all trading activity was on the app before it was launched.
Wow.
So that's risen to 75%. Despite the fact that it's only 2% of the total market, of the total trading value, but it was the majority. So you see, it shows a huge interest in investing. And I think for me, this is the biggest paradigm shift, and it's the biggest legacy that we shall be leaving behind.
Would you say this trend of local investors taking the bigger chunk of the market is going to be what we're seeing as a new chapter?
Yes, indeed, it will. Just to give you some statistics, when I took over in 2020, 75% of all trading was being done by foreign investors.
Wow.
Today we are at 50-50, and we are hopeful that in the near future it'll go to 75-25 in favor of locals. What does that do? It de-risks our market. It means that the local public have confidence in our market and will invest in it. So we're going to be less susceptible to extraneous economic activity. What the Feds do in the US will have less of an impact if we are trading our own companies with our own money.
Absolutely.
And to add on to that, I mean, I think it'll also create a greater interest by high net worth individuals who own companies that are listable to come to market as a way of realizing value. I'm sure you're aware that many of the courtrooms in Kenya are populated by court cases. Are conversing today and determining cases on families that are, disputing on wealth issues. And you see, as part of even, planning, family estate planning, I mean, the exchange will provide an excellent avenue. And will also deal then with the supply side, because the public have demonstrated they are willing to invest some more. And I think I'm really glad that we hired Frank Mwiti. We took an industry outsider. There was a lot of resistance in the beginning. And what as the board chair, I was absolutely clear that we wanted it not to be business as usual. Absolutely. And I believe we have demonstrated.
It's right here.
Yes.
Let me come back to the KPC IPO. And we have seen the government strategically now raise some funds, and we really hope it will be very significant to the use that they have. But I wanted to come from an NSE perspective as chair. When you look at this, what's the strategic significance of this listing for the exchange?
I would say that the exchange will be raising the 106 billion for government.
Yeah.
So what government does with that money is not really our business, because we are the platform in which that value is realized.
Yeah.
However, the government has been very clear in its policy pronouncements as to what they intend to do with that money.
Yeah.
As you're aware, the National Infrastructure Fund and the Sovereign Wealth Fund are in creation. And I do believe that those will be game changers.
Yeah.
And as an exchange, I would say I am really glad that they will be using that money not for recurrent expenses like salary and allowances, but for the development of this country.
Yeah.
And I am one of the people who are greatly persuaded that the face of Kenya over the next 5 years is going to change forever.
Yeah.
Because you see, if you deploy the 106 billion from Kenya Pipeline, if you deploy the 350 billion that they are getting from Vodafone for the sale of the Safaricom shares, that's close to $500 billion shillings.
Absolutely.
So even if 80% of that goes directly towards infrastructure and towards the creation of a sovereign wealth fund, as a country, we will be head and shoulders ahead of our contemporaries.
I mean, speaking of what we've been observing in the market, especially across all indices, I mean, we have seen great growth and the likes, but I want to specifically speak about the banking sector itself. And what we have seen is that the banking sector index has been a major driver of this particular rally that we have seen as well, with activity concentrated in just a few large counters.
Yeah.
And I wanted to ask you whether at the board level you've seen this, and are you probably working on something out so that it's not a concern of over-reliance on a handful of players?
I would say that the banking sector has demonstrated great resilience.
Yeah.
And I would say also that kudos to the Central Bank of Kenya, their primary regulator, for really making sure that they're ensuring that the four walls in which banking operates are highly governed. We've seen a lot less failure in the banking sector in the last decade as compared to the historical past. I would also like to laud the Kenya Bankers Association, because the Kenya Bankers Association also provides a self-regulatory mechanism and as an institution that also works to lobby for the interests of the banking sector.
Yeah.
And that the banking sector in Kenya went into the deep end by the challenge and the competition they faced from M-Pesa. And thankfully, we've seen that the M-Pesa app and M-Pesa as an enterprise has been successful, as the banks have also been successful. They have been able to coexist harmoniously and provide an ecosystem where profitability is generated for shareholders, employment is created for the public, and taxes are paid to government. So if you look at the ecosystem holistically, I think banking has been a big factor. But is there a concentration risk? Of course there is. And, we do hope that the concentration of, the prosperity and profitability in the banking sector is not seen, just from the prism of that alone.
Okay.
You need to look at it in the context of the macroeconomy.
Yeah.
So with reduced interest rates, with improved macroeconomic environment, with the debt ratios being handled better, Kenya having a longer foreign exchange cover, I think that many other sectors are going to come in and take the place that banking has. But banking has really strongly underpinned economic resilience in Kenya.